Hey, what's up? Trader Tim from EminiMind. Quick trade recap video this morning. It's Thursday, the 6th of March. I just wanted to run through the trades here. Definitely been a lot more activity this week and last week, which is great. A little bit bigger ranges, but still manageable to trade. So let's go through things. The first one today was right at the kind of right at the open, 5 minutes in. Had this inverted hammer down here and took that one long. That was a nice big reversal bar. We had a gap down, as you can see over here. The 21 EMA, takes some time to catch up, as we'll get to in a minute. This inverted hammer was another one that I took right at the 21. But when we have a gap down like this or a gap up, it's going to take some time for the 20-minute to catch up. So you could say the trend is down just for the fact that we gapped down. And so then I would consider this hammer a reversal bar. And a lot of times in the first 10 minutes like that, those hammers and inverted hammers can be big moves. So I do tend to take, I'm okay taking a hammer, an inverted hammer. I'm not okay taking a retracement. So took that one. That one went up just a little bit. It did not push into new highs. I have been doing a +6 as my first target on the hammers and inverted hammers, and then trailing the second half of the position, trailing each candle. You can trail swings. I've just stuck with trailing each candle. When volatility is lower, trailing swings works really well because you are not getting as much undulation. You get these little pullbacks, and then it goes up a couple of points. Little pullback goes up a couple of points. When volatility is bigger, or the candles are larger, and so moving it up underneath the next candle could be moving it 4 or 5 points. So that's how I've been doing it, and how I'll just continue to do it for now. And so got a +6, and then moved the stop underneath the third candle here. That one was out for break even on the second half of the position. And then we had the next trade was the 15-minute opening range breakout. And that one traded to the upside and then came down for a quick -4. The next one was a crossover, and that one that's when things got moving kind of quick here. So full halfway back of the day at the time looked like this from high to low. And so that 50% retracement, as we see on the 512 tick chart, was right in this region. We had a retracement long like this, came up to its -23, came all the way back down and retested the 50, and then the next 50% retracement crossed over the full halfway back short. And so that's kind of why I coined it the crossover. And so it broke the 61.8 and then pulled back to the 50 at 64.50 and then traded up. And so this one, traded up very quickly. And so, you start by trailing the next 61.8. As soon as it breaks the swing high here, I move my stop to break even, and then I draw up the next retracement and put it underneath the 61.8, put my stop underneath the 61.8. And then since we were just going up in green candles, I just trailed each one as best I could. And then at in this whole move up here in green is like in the course of a minute and a half. So we made this push up, and then we came right to the 21 EMA. That was another reason that I wanted to get my stop tight underneath each candle. And keep in mind, these candles are moving fast, so you're doing your best to move it underneath each candle. If you're a couple ticks away or even a point away, it's not the end of the world. The idea is you're staying with the trade while it's going your way versus just flattening the position. But seeing as we were coming up to this 21 EMA, I like that for a potential short, especially because it kind of coincided with the high from the morning. So got out of the halfway back long. That one was actually like a 10-point move, 10.5 points going just this run up here. So bigger ranges, bigger profits, really helpful when volatility is picked up a little bit. So then after that one, we had this nice inverted hammer, shorted that, That one came one tick away from my stop. 3 points is my stop, and came one tick away, but we did get the move down. And then that one went for, I got the +6 on the first half, and then I trailed each candle in the second half for another almost 4 points on the second half of the position. And then we had news at the top of the hour, so didn't take this. Where was it at here? There was a one right before. Was it this inverted hammer? Yeah, the 758 inverted hammer. It really wasn't at a high or a low, but I just wanted to point that out, that I wasn't interested in taking a trade here because we're 2 minutes before the top of the hour, and we had a what do we have? ISM this morning, another number coming out. And then, but this one I did take, the 802. We had the inverted hammer right at the 21, and that was a nice setup. That one did stop me out. And then we turned and ran to the upside. I know some people took this hammer long. That's a good play. We're kind of at an inflection point because at this moment in time, you have established the 30-minute high and low, and it's like, okay, are we going to stay inside the 30 minutes range, or are we going to break out? And very quickly, we broke to the upside here. And that one, let's see. Oh, then the next one, rather, was the 808. I chose to take this as a little counter trend inverted hammer. That one didn't get much leg, didn't get really much to the downside. I thought we could get to the 21, and then I could pick up a hammer long off the 21 because now the 21 is moving up, but that wasn't the case, and so that was the last trade. So a whole bunch of +6s, some follow-ups for 3 and 4 points on the second half of the position, a stop out at 801, -4 on the 15-minute opening range breakout, +10 on the crossover trade. Yesterday I bought some puts at the close. That was the March 14th, so next Friday was the expiration, and it's the 580s? Yeah, 580s. They were a little more expensive. It was like $670 or so for contracts. So I typically run about a 1% of the portfolio for buying puts. So if you got 500,000 in the underlying position, and then 1% of that is what you would be buying puts with. So technically, it doesn't matter what the value of the put is, whether it's $3 or $8, because you're just dividing it into the 1%. I'll hold them to the close, see if we get a sell-off into the close. If we close underneath the 50%, I'll hold them till tomorrow, and if we don't, then I just close them out tomorrow at the close. And then I guess the only caveat, well, yeah, we'll leave it at that. I didn't take this. I didn't buy puts on this one up here because that was at the open. So I waited till the close, and we had sold off. So this was really the first opportunity I felt like to buy puts. And if we break this 61.8 on the daily here, then we can draw the full halfway back and then have another opportunity. This is really the better opportunity, the 592s, because you're at the full halfway back and you're at the 21 EMA here with a bigger pullback. But anything can happen. So we'll see if we sell off into the close today. If we do sell off hard into the close, I'll probably sell half just to lock in some profit, because when you get these higher volatility environments, you can get some gap ups and downs, and especially with options, you have the time decay, and I don't want to be stuck feeling like I need to hold them over the weekend. So at least if I take profit on half, then you're at least guaranteed a gain. So I think that's everything I got from today. I just want to check my notes here. The other thing you can do when volatility is higher like this, you can cut your position size in half and then double your stop and double your target. That's one good approach. And then when you're trading intraday, the safest trades to take are with the trend at the 21 EMA. So like this inverted hammer here is kind of with the downtrend inverted hammer at the 21 EMA. Only trading longs through here. Like I did take this 808 here. That's a counter trend trade, a little bit higher risk. It does have higher reward because we could drop all the way, down to the other end of the range, but it is a higher risk trade. So if you're, to simplify your entries, regardless if you're taking hammers or halfway backs or whatever your entry is, sticking with the trend, using that 21 EMA to guide you as the trend. So like as you get up in here, rather than trying to counter trend, meaning taking a short because the 21 is pointed up here and kind of taking some of these little inverted hammers here short, you're going to have an easier time or a lower risk trade trying to take the hammers long, because even if you might be getting in off of a hammer, someone else might be getting in off of a other trending indicator, if you will, and you just have more momentum and a better chance of getting that trade to rip versus counter trend. Yes, the reward is higher, but it has a little it has a higher risk as well because you're going counter to the trend. So just a couple things that are worth considering when you're trading in this isn't really a high volatility environment, but for most people, this is very high and not what people have experienced probably, since 2022, really since COVID. And I know most traders, or a lot of traders, haven't been around since pre-COVID or 2008 in that era. So this is all well and good. This is actually my preferred trading environment. You'll see it as we go through trades here. I have a lot more trades. There's a lot more opportunities throughout the day, and it's just a great time to be trading. So we'll leave it at that for today. If you have questions, drop them in the comments. Otherwise, have a great weekend. We'll talk to you soon.